Told y'all looks can be deceiving, deceiving, deceiving.
Even if it's in the green, it could be a bull trap. Looked at market cipher just to see where the money at. Green dot on the 30-minute just to be exact. Phone on do not disturb, making sure it don't distract. I'm a firm believer in Bitcoin to 100 racks. If you doubting that it's going, then faith is what you lack. Green candles going up, looking like it's finna crack. Eating gourmet meals, but I still love my snacks. Consolidation, man, patiently waiting for a signal, hoping that
What up, Vigilantes? I'm here with Mr. W to talk about the state of crypto and how we can take advantage of this bear market in its present state. How are you doing, Mr. W?
I'm doing good. Hope everybody else out there is doing okay and staying safe.
All right, so for everyone that's watching this and wants to understand what has been happening in crypto, Mr. W, maybe you can give us a quick rundown.
FTX, huge exchange in bed with the regulators, run by some sociopaths, ended up running away with everybody's money. Big Ponzi scheme with lending out money to their own hedge fund and preventing liquidations. And I mean, it goes a lot deeper than that, but that's just kind of the surface of what happened. So everybody lost that had money on FTX, probably lost a ton of money. Any investors in FTX, as a venture, I have to write down those investments to zero. A lot of firms are already doing that. And so it's just caused tons of collateral damage, tons of capital evaporated, and these bad actors are now still on the run, getting puff pieces in mainstream media, which is super frustrating. And so,
I know
that brings us to another thing, which is like, is this kind of a planned demolition kind of thing? Was he a Fed, or were they just that bad of people? And it's too early to tell now. But I mean, I wouldn't be surprised if there's some really shady stuff under the surface, and hopefully we find out what those things are sooner rather than later.
Yeah, like if you listen to the Crypto Vigilante, if you're a subscriber and you follow what we teach as part of our research, you shouldn't have gotten affected in your personal finance. I personally, I don't feel it because I follow what we recommend, I practice what we preach, and I never leave crypto ever in a KYC AML exchange. I never treat it as a wallet. And that's a secret, not your keys, not your crypto. We've been saying that way before this started, Mr. W. I made sure to tell our subscribers, move your money out of exchanges because things are getting fishy with all these talking back and forth between Eric Voorhees and this SBF guy that I didn't even know this guy existed. That's how little I care for these bankers, because that's the truth here, Mr. W. This is not a problem with crypto. This is a problem of bankers. The banking establishment has crept into crypto, and a lot of Wall Street comes into crypto because they see it as a playground for them, and they're bringing in their antics and their bullshit. And the way you take care of that is to completely stay away from where these guys mingle, especially exchanges like FTX or any other exchange that's KYC AML. If you need to use an exchange, take your money out of there right away as soon as you're done with your trade.
Yeah, 100%.
Why is it that people keep their money in the exchange? What happens? Do they get comfortable? Do they get lazy? Why is it that we say these things, not your keys, not your crypto, and we even see people that should know better remain there? Is there any, what drives people to keep their money in the exchange?
I think it's
convenience, or what is it?
A combination of multiple factors. I think for new people, they're used to dealing with the traditional banking system, and they just, if you walk into Chase or, Wells Fargo or something, open an account, you just assume that they're regulated and that, the bank, they're a bank that'll work the way a bank has worked for us. So people in their minds just think, oh, if I sign up for this account, quote unquote, this account with FTX, that kind of feels like a bank where I can deposit money, then they just assume, well, somebody must have looked into this. And so I think new people make a mistake just trusting, being too trusting. And so, hey, look, we were all noobs in crypto at one point, so we've all made mistakes in our past and had to learn those mistakes the hard way. So that I'm okay with. You know, people that came into this space this cycle, you know, you got to learn some lessons. There's some dues to be paid to stay in the space. But I think it's the OGs that got more lazy and that felt like it was, you know, they're kind of a lot of especially OG traders, because of all the regulatory BS all over the world. It's all different everywhere. A lot of people get pigeonholed into these, you know, certain exchanges without having an option really to trade anywhere else. So if they're like, if I want to trade, I have to trade at this venue and take the risk of having, you know, that kind of third party risk. And so, you know, I think it probably was a thing of they were on TV all the time. And so, and they were, you know, talking to regulators, and they were, you know, he was supposed to be this whiz kid math guy, you know, which a lot of crypto people can kind of fall for. But at the end of the day, you know, what they forgot was, yeah, you can keep some on an exchange, just don't keep a lot. You know, you don't have to trade your whole stack all the time and keep all of it on an exchange. And so, I mean, again, these are going to be hard lessons to learn again, especially for a bunch of the people that have been around. But, you know, that, you know, I guess that's what happens when we do get lazy.
How much of an impact has this caused on the charts, and what do you see this as being the result going forward? Because it seems like what has been anticipated by the technical analysis has changed, obviously. So where are we with that? Could you please tell us?
Yeah, sure. And I'll show some charts in a little bit, but just to, you know, give everybody just an overview, it actually, you would think with something the size of FTX going under in this spectacularly insane, weird, crazy way, that the markets would be absolutely slaughtered. And I mean, you can see it in a lot of the altcoins that were kind of the playground of FTX and Alameda and SBF, all the Sam coins is what crypto Twitter called them, that pumped like, you know, 100, 500x in the last cycle. These things are getting obliterated. But if you look at, you know, if you look at privacy, most of the privacy coins, if you look at BTC, if you look at even ETH, I mean, you know, again, we're not huge fans of the philosophy, but I mean, it's a major crypto protocol that people look to, you know, for kind of a state of the health of the market. And things are, I mean, they're holding up much better than you would think. I mean, you know, I would think something like FTX going under would be like a minimum 50% drop from like wherever we were beforehand, which is like 20K. So I would have thought, man, FTX would get some crazy wick to 10K. You know, I mean, that's a huge deal. You know, we held 15.5. Now we're back close to 17. I mean, that's impressive stuff.
It
you
is
know, not even just looking at the charts, just price action wise, just feeling the resilience of the majors. It's pretty encouraging, honestly.
You know, something that I've always held to is to understand that anytime you in crypto, externalities are evil. And that's kind of like a motto that I've always had. Anything that is external to the crypto experience is it leads you to evil, for you to be able to get manipulated. The more you move yourself out of self-custody, you're opening the door to evil, for bad things to happen. The more you move outside of scaling, that is, like, in my opinion, you know, on the blockchain, you're moving yourself to manipulation. You're opening doors to things that can affect the network or affect your personal life that shouldn't be. So if you hold your private keys, if you don't trust an exchange, you will never have to worry about anything like that. If you build on a protocol that requires you to depend on a protocol stacked on another protocol, you know, that's iffy, right? Like Ethereum, right? They want to, you know, you want to have to build on a side chain and on the second layer on Ethereum in order to actually create something. Whereas if you use DERO, you build within that one protocol on chain, ready to go. It's everyone's incentives are aligned to build within that network in that one layer. So again, simplicity here is the way to go, guys. Stay
Yeah.
away from anything external. And you know what's always bothered me, Mr. W, is how unfortunate it has been for crypto to have to depend on external factors like these exchanges.
Always. That's that's always the kid. We always get screwed by this stuff. And so that's why, like you said, DERO, that's a great example of like the kind of protocols we need to be building with built-in privacy that have, the capabilities, smart contract capabilities to do on-chain exchange, decentralized exchanges for real. So yeah, so you don't even go anywhere where they'd be even close to KYC.
Right on, right on. And you know what? Look, in a world where people need to negotiate and deal with regulators, right? For entities, institutional money, for example,
Yeah.
or anybody that needs it for their life or wants to, we could also develop a future of exchanges that are on chain, that comply with whatever they need. So you can create those bridges between fiat and crypto. I've always heard the need for these exchanges to exist in order for them to serve as a bridge between fiat and crypto. And fair enough, that's a fair argument. But I think that we could, and we have the ability now to create those bridges on chain so that they're kept accountable, whether they be within protocols like DERO that are private by default, or other protocols that are not necessarily private by default, but that offer that transparency for us to keep these people accountable, right?
Right.
So let's look at the charts, Mr. W. Where are we and where are we going?
Awesome. All right, so I'm going to get the screen share going here. And first of all, I just want to run through a few headlines here, just because if you just type in FTX in Google, you'll get like a host of different crazy things. And I just thought it was funny, not funny. This is just getting insane that the headline I saw today was that the Bahamian government was the one that ordered FTX to hack itself. So the Bahamian government told FTX, hack yourself, drain all the assets, and then give them to us to custody. And I don't know if this has been confirmed yet, but this was in some major news publications. And so I think there's some validity to it. And it just gets weirder and weirder with this thing. Now governments are going to start fighting it. Maybe this is the first case where we get governments, tussling with each other over whose assets they are. That could be interesting. So that's just something to think about. Obviously there's some value there. If they're fighting over, they just throw the thing in the trash. If they thought it was worthless, then who gives a shit?
Right.
I just think it's interesting that maybe we're starting to see, some sovereigns get kind of testy when, whatever they think is their crypto starts to maybe get infringed upon. But yeah, let's go charts here. Let's start with the daily. Here's what I was talking about with FTX. We were, call it 21K right before the rumors started flying. That was last Tuesday, Wednesday-ish, I think. And so we started breaking down, but from 21, we pretty much held 16, barring, maybe 6 to 8 hours here in the 15s total over the past week. But, this isn't that big of a drop given the magnitude of the news. And, if we look at it in the context of the June low, which is right here, look at the magnitude of this move. Huge. Wow. Compared to this one. And so, it makes me think that there was a ton of forced liquidations. Like this was Luna, this was Celsius, this was Three Arrows. This was all those guys who were all the counterparties to FTX, which I think ended up causing a lot of this here. And so, right. But a lot of the damage was done here. We just didn't find out about it specifically with FTX until this. And so, either the market kind of saw it coming, or there's just not that much left to sell. Regardless, it's encouraging, and it tells me that what Mr. A and I have been saying for a long time, that we're within weeks of a bottom, and maybe we put it in here, is still intact, and that we're in the sweet spot to buy for the next 4-year cycle. Now, I think, what would it take? So, and a lot of people on crypto Twitter are talking about this. What would it take to go from where we are now, 16, 17 to 12? I think 12 is kind of every technical analyst target. That's this guy here. Let me bring up the monthly. And so that's this moving average here with my buy star, which I've had here for a long time. And so, that's 12.4. So what would it take to get us there, or to 14? And so what else could surprise the market? Because when something like FTX happens, the market tries to then, or participants in the market try to then price in the worst case scenario possible, period, going forward. Like you try to price in all bad news at that moment when everything is capitulating. And so the market's probably priced in a lot. And so I think there's only two things that could trigger a move to like 10, 12K. That would be Binance going under and BNB starting to tank. That would be horrific, obviously, and probably a similar but larger deal than FTX, or Tether goes down. And so, again, on Twitter, maybe it's just, hedge funds starting rumors so that they can buy the dip, which happens all the time.
All the time, yes.
People do that kind of stuff. But I mean, that's just par for the course. So, but there's rumblings there too. So, those are the two big trees left standing that could fall, in my opinion. But if we don't get something that major over the next 4 to 6 weeks, and we just chop around in here, I mean, I'll be ready to buy and leverage up for sure. Now, the thing we were talking about yesterday on the video was this right here. If we go out from the log, we see the top here, and if we went back to, let's go to the this cheat sheet here. And so, here we had the capitulation right here down to the June low. And then here we have anger, boom, right here, creating a new low here. It's almost exactly mirror image of this anger phase. So we should get a bounce here. Mr. A and I were talking about this last night, that we really should be seeing a bounce. We could carve out a bottom, get that anger bounce up to 19, 20K. And then you get the final test, and that would be either, after we get this bounce, or even, like I said yesterday, maybe we just chop through here from 16 to 18 for a little while, and then we get the next down. But it's either going to be after anger, it's either going to be a retest of anger, hold, and then we can be sure that we have a higher low and that we can start grinding away for building a base for a new bull market. Or we'll grind down to a new low. I think that's Mr. A's base case, down to 14-ish on a bleed here. And so, I don't know. Again, I'm kind of torn. This is what I've been thinking about all week. Is that in order for us to smash down to new lows, it feels like it has to be fast. It feels like it has to be news driven. It feels like it has to catch people off guard. People freak out, real panic, and long-term holders, like, people are just losing it. And again, that would be like a Tether, Binance kind of deal, but that wouldn't be a grind.
Wait, what kind of long-term holder? I got into crypto under $10, bro. Bitcoin under $10. What do you mean? We're not freaking out, bro. I'll freak out if Bitcoin goes to 500. No, not even. I'm like, I got it under $10. Like, why would I worry? Yeah. See, people that freak out are those that just got in, and they got in out of FOMO, most of them. So
if let's say you bought the 2017 high from anywhere from 15 to 20K, and you never sold anything, and it's been 5.5 years, and now you're in the red and it keeps going lower. Those are the people I'm worried about that are going to capitulate.
But see, those people have fallen for a lie, in my opinion, Mr. W. They've fallen for a lie of Bitcoin and crypto being a doom nothing space, when it's an actual place where we can create wealth, a place where we can actually create a new world, a new internet, anew everything. And it's almost like it's that do nothing mentality coupled with these dependency on these externalities that leave them just, that whole hodl mentality. I don't like it, man. I think you should build, and I think you should like strive to make, everyone should strive to make their crypto via their own labor. What I mean by that, within crypto itself. So, and that's a whole different topic of conversation, but the real problem that happened, as we already explained, this situation is one that concerns banks. It's not crypto. This is just banking 2.0 that uses crypto. So the problem here is the same problem that we are running from with crypto. Do you understand what I'm saying, Mr. W? It's like if you're using FTX, you are not using crypto. Like I can't.
Right, no, yeah, absolutely.
Yeah, you are not using crypto.
Totally.
You're using
and
a financial institution that comes from the banking establishment,
right,
leveraging off the existence of crypto and doing what banks do best, which is steal people's money. So
right.
why are you surprised? Why are you surprised that some banksters came into crypto and stole your crypto? Bro, they not only hate crypto, but it's like they also know the value of it. So what's the next move for them? To steal it. That's all that really happened here.
Yeah, well, and I mean, I totally agree with your sentiment about building, but going back to price, this is going to happen no matter what, though. Like, this is the psychology of a market cycle. This has happened for thousands of years. The same pattern in every asset that you can possibly imagine, because this is just human nature. And so even if we have a totally on-chain future, we're still going to have bubbles and crashes, because that's the same in the with a gold-based market. It's much more stable than a Fed central banking economy, but you still have humans involved, and so we still get too optimistic when things feel and look good, and we get too scared when they look and feel bad. And so I'm just, my point is just that, let's try to take advantage of whatever your asset is and whatever your philosophy is. Use what we know about financial markets to take advantage of it. And now is the time to do that.
Right on. So, all right. So I'm pretty sure you're going to start giving subscribers of the Crypto Vigilante buying levels then, huh? And when to come in and take advantage of these opportunities.
Oh, certainly. And yeah, we've been doing that all along. And I mean, the levels are pretty clear at this point. Obviously, I've talked about 12K, but if we don't get there, then what? The shorter term charts help us with that stuff, and we give many different time frame analysis and just perspective analyses for the Crypto Vigilante subscribers on a pretty much daily basis. And because things change so much, especially in an environment like this, what was the buy level yesterday at 16 could be 14.5 24 hours later. And because that's just how the markets move when there's this level of uncertainty. And that it's not always like that. When we come out of this, it'll get much easier. The levels get clearer as far as like buying dips, and especially we're in a trending market. But I mean, it's important to stay apprised pretty much every day, because things are changing so rapidly.
Right on, Mr. W. Well, thank you so much for your time. And
Oh yeah, man.
Guys, not your keys, not your crypto. It's that simple. Don't leave your money in exchanges, because things like this happen. Bankers and shitbags from institutional money will keep coming into crypto, and their goal is to steal your crypto. Don't forget that. Their goal, because they know they can't kill it, so they have to try to manipulate it so that they can, and steal it from you. I don't think that this is going to be the first time we'll ever see something like this, because Bitcoin and crypto is that valuable. Thank you for your time, and thank you for being with us, Mr. W. I really appreciate talking to you.
Likewise, man. Appreciate it. Anytime you want to have me on, I'm happy to do it. Let's do it.
All right. Thank you very much. Peace, love, anarchy, guys. Take care.